Cryptocurrency for beginners. You may use cryptocurrencies to pay for products and services, access applications and games, or exchange them for cash. Here's more about what cryptocurrency is and how it works. Cryptocurrency. What is it? Cryptocurrency, or crypto, is a digital currency used as an alternative payment method or as an investment. The cryptographic methods that enable users to purchase, sell, or exchange cryptocurrencies safely without the need for a centralized authority, such as a government or financial institutions, are what give them their name. For instance, Ethereum enables developers to create automated applications in what has come to be known as decentralized finance, and Tether is a stablecoin whose value is tied to the US dollar. Bitcoin was developed primarily to be a form of payment that isn't controlled or distributed by a central government. What draws individuals to cryptocurrency investments? People invest in cryptocurrencies because they think that as a specific cryptocurrency's value increases, so will demand for it. Let's use Bitcoin as a simple example. Theoretically, if consumers and companies agreed that using Bitcoin provided a superior shopping experience to using dollars, customers may switch more of their dollars to Bitcoin while businesses might accept more Bitcoin payments. The demand for Bitcoin would rise if this occurred on a significant scale, driving up its dollar price. Therefore, if you had acquired one Bitcoin prior to that rise in demand, you might conceivably recoup your investment by selling it for more money than you paid for it. Ethereum follows the same rules. The Ethereum blockchain, read more about blockchains here, uses Ether as its native money, allowing developers to create financial apps without the aid of a third-party financial institution. The demand for Ether should increase as more apps are created and operate on the Ethereum blockchain, as developers need it to do so. It's crucial to remember that some people do not view cryptocurrencies as investments at all. For instance, proponents of Bitcoin claim it is a far superior form of money than the one we now use and desire that we use and accept it as regular currency. What is the process of cryptocurrency? Blockchain technology, which retains a tamper-proof record of transactions and keeps track of who owns what, underpins cryptocurrencies. The use of blockchains solved the issue of stopping people from duplicating their holdings and trying to spend it twice that plagued earlier attempts to establish entirely digital currencies. Depending on how they are utilized, individual cryptocurrency units may be referred to as coins or tokens. Some can be used to engage in certain software programs like games and financial products, while others can be used as storage of value or as units of exchange for goods and services. How are digital currencies made? Bitcoin uses a procedure called mining, which is a typical method for creating currency. Computers must solve challenging problems as part of the Bitcoin mining process in order to validate the legitimacy of transactions on the network. The owners of those machines can get freshly minted Bitcoin as payment. Other cryptocurrencies manufacture and distribute tokens in other ways, and many of them have a much less environmental effect. Why do cryptocurrencies come in so many different forms? It's critical to keep in mind that Bitcoin is unique from other cryptocurrencies. The market is huge, even though Bitcoin is the oldest and most valued cryptocurrency. Over 22,000 different cryptocurrencies are publicly traded, according to market monitoring website coinmarketcap.com. And while some cryptocurrencies are obscure and basically worthless, others have cumulative market prices in the hundreds of billions of dollars. It might be beneficial to start with a cryptocurrency that is widely traded and somewhat well established in the market if you're thinking about investing in cryptocurrencies. But in such a volatile market, carefully choosing your coin is no assurance of success. In the intricately integrated crypto economy, problems occasionally surface and have a significant impact on asset values. For instance, the market suffered greatly in November 2022 as the cryptocurrency exchange FTX battled liquidity problems brought on by a surge in withdrawals. Cryptocurrencies of all sizes saw their prices decline as the ramifications grew. Similarly to stocks, are cryptocurrencies financial instruments? Currently, there is some debate about whether cryptocurrencies are considered securities. Whether cryptocurrencies should be regarded as securities is now up for discussion. Because they reflect ownership in a public firm, stocks are considered securities. Because they reflect an obligation owing to the bondholder, bonds are considered securities. Furthermore, both of these securities are tradable on open markets. A growing number of regulators are beginning to suggest that cryptocurrencies should be subject to the same regulations as conventional assets, such as equities and bonds. The laws that apply to stocks and bonds, for example, don't apply to cryptocurrencies as extensively as they do to other financial instruments, according to academics, legal companies, and some of the biggest participants in the cryptocurrency business. The Securities and Exchange Commission most recently targeted cryptocurrency staking, asserting the benefits received through staking should be registered as securities. The SEC ordered cryptocurrency exchange Kraken to end its staking program in February 2023 after charging that Kraken had neglected to register its staking offering as a security. At the vanguard of cryptocurrency regulation, the SEC's decision on whether to treat all cryptocurrencies, or just some of them, as securities, might have a significant impact on the asset class in the near future. NFTs resemble cryptocurrencies? Non-fungible tokens, or NFTs, are electronic assets that grant ownership of what may be regarded as the original copy of a digital file. They are comparable to cryptocurrencies in many ways, and they may be purchased and traded on many of the same exchanges. NFTs, however, differ from cryptocurrencies because of the awkward phrase non-fungible in their name. Because cryptocurrencies are fungible, every unit of a given cryptocurrency is essentially equivalent to every other unit. Your one Bitcoin and mine both have the same worth. Bitcoin's benefits and drawbacks. All types of investors have strong opinions on cryptocurrency. Here are a few justifications why some think it's a transformative technology while others think it's just a fad. Experts in cryptocurrency. Some cryptocurrency proponents prefer the idea that central banks are no longer in charge of controlling the money supply since over time, these institutions have a tendency to devalue currencies through inflation. Some people view cryptocurrencies as a possible entry point for groups that have been neglected by the traditional banking system. According to statistics from 2021 from the Pew Research Center, those who identify as Asian, Black, or Hispanic are more likely than white adults to say they have ever invested in, traded, or used a cryptocurrency. Because it is a decentralized processing and recording system and has the potential to be more secure than conventional payment methods, some proponents of cryptocurrencies favor the blockchain technology that underpins them. Through a practice known as staking, several cryptocurrencies give their owners the ability to generate passive income. Crypto staking entails leveraging your digital assets to support blockchain protocol transaction verification. Despite the hazards, staking might let you increase your cryptocurrency holdings without having to acquire more. Cons of cryptocurrency. Numerous cryptocurrency initiatives are unproven, and widespread use of blockchain technology is yet years away. Long-term cryptocurrency investors could never get the gains they expected if the fundamental concept does not succeed. There are additional hazards for short-term cryptocurrency investors. Since its values fluctuate often, many people have profited swiftly by investing in it at the appropriate moment, but many others have lost money by doing so immediately before a coin crash. Those erratic price swings can also go against the fundamental principles underlying the initiatives that cryptocurrencies were designed to assist. If you find this video useful, don't forget to like and subscribe to our channel.